Our speaker today is Matt Hayes. Matt is with our endorsed agency, Sovereign Insurance Group out of Philadelphia, Pennsylvania. Matt's title is a vice president of sales, but don't let that fool you. Matt is one of the most insightful and learned insurance technical experts that I've met. And I've been in the business for about longer than I care to admit. And I'm going to turn it over to Matt and let him cover a topic that is of much discussion these days. Matt, go ahead.
Thanks, Jeff. Technical expert, I don't know if I can fully co-sign on that, but my 12-year-old daughter told me the other day that she looked me up on the internet and it was boring. And I said, insurance is not boring, but let's talk about these things. She's like, no, Daddy, you're very boring online. Okay. All right. So here are some of the topics that we're going to cover. So the GCFA proper coverage standards, key coverages to verify when we're thinking about disaffiliation, tail policies if reincorporating as a new entity. And so as conferences are doing it differently, or some are requiring entities to completely reincorporate, and some are just requiring a name change, right? So there's going to be a difference in terms of how the insurance policies respond if we're doing that. And then disaffiliation and continuance with the UMIP program, and then a quick overview of UMIP and Sovereign. So proper coverage standards, these have been retitled, but it's a book of discipline, is that churches must compare coverages to the requirements. And UMI works with GCFA to keep the requirements relevant to the current exposures. It's approved by UMI's board, the Committee on Fiduciary, Foundation, and Property Matters, and GCFA's board. It's adjusted based on input from the connection, insurance advisors, and carriers. So that link to the proper coverage standards, this used to be called the minimum insurance requirements. It's been renamed to proper coverage standards. And it is the perfect kind of jumping off point for what you want churches to have, whether or not they're disaffiliating or not. But if they're disaffiliating, it's very good to refer to the proper coverage standards, make sure that they have it. We're going to talk about some of the key coverages within that to verify. So first is additional insured status on available lines of coverage. So we would recommend that conferences would request the churches to put the conference as an additional insured on the available lines of coverage. So by available lines of coverage, we mean general liability. Typically, you can't be an additional insured on a directors and officers policy, but you want to request it as broadly as possible. Sexual abuse and molestation. You want to make sure that the churches have sexual abuse and molestation. Ideally, you would love for them to have $1 million worth of coverage, but with the property coverage standards, we have it as a little bit lower for smaller congregations. Employment practices liability, directors and officers liability, general liability, pastoral counseling, employee benefits, and then workers' compensation coverage. You definitely want to verify it, but especially if they're leaving a mandatory program. So a lot of the churches out there and conferences will have a mandatory program that would include workers' compensation coverage. If they are leaving, we certainly recommend that you verify that they have new workers' compensation coverage. So if entities are reincorporating as a new entity, here are the key procedures to follow. Number one, we want them to maintain copies of prior policies. Number two, we want to require a purchase of a 3-year tail policy or maximum allowable for claims made coverages. So why you want to maintain copies of prior policies is, let's say a church had a sexual abuse incident that happened in 2020 and it comes to light in 2023 or 2024. If it's an occurrence policy, all they have to do is refer back to who they had in 2020 and file a claim with that insurance company. However, if it is a claims made policy, that entity no longer exists anymore. And that insurance policy is not going to follow the new entity. So that insurance policy ceases to exist. And within there, there's an option in all insurance policies for claims made policies. It's written into the coverage form that you have an option to purchase tail coverage, which tail coverage, and Jeff could speak on it more perhaps, but essentially it is allowing the church, in this case, a extended period to report claims. It isn't new coverage moving forward, but it's basically if we find out about a claim in 2024 that might have happened in 2021, we can still file coverage for that claim. It extends the period that we can report claims. It doesn't give you new coverage, it just allows you to report things that happened in the past. Because how claims made coverage typically works is written into every single insurance policy. It's going to say, well, after this policy ceases on January 1 of 2023, you might have 30, 60, or 90 days, depending on how the policy is written, to actually report claims that you know about. Well, that window is very short, and that's why we recommend a tail policy, particularly in the areas of employment practices, liability, or directors and officers. Those are going to be kind of the bigger claims areas, and those often you don't find out about right away. You might have an employee who leaves and they're unhappy when they leave, but they wait 2 years to file a lawsuit, right? And they say on their way out, hey, I didn't love it here. Does that constitute a claim? No, it doesn't. And does that mean that the church should notify their insurance company, hey, we might have a potential, we fired this person? Probably not, unless that person's saying, I'm going to sue you. So most employment practices claims, they end up happening 6 months, 9 months, 12 months after somebody's been terminated. And so if reincorporating as a new entity, it's really important that you require them to purchase tail policies. And that's going to be the same if they are reincorporating as a new entity as a part of disaffiliation, or if they're merging with another church, right? Let's just say a smaller church is shutting down their operations and they're going to merge with another church that's still in the connection, right? They're not disaffiliating from entity, but that entity is shutting down. You want the entity that's shutting down to purchase a tail or a quote runoff policy for that period of time. And usually 3 years is a good kind of standard bearer. The policies, some insurance companies will say, well, you know, if it's sexual abuse, the maximum allowable in our policy is 1 year, and that's all we're going to extend. Okay, well, that's all they were willing to extend, but ask for broad. And then if they come back and say, we can't get that, and here's the note from the insurance agent or whomever, that's a good way of start broad and then perhaps allow for exceptions if it isn't available. And then lastly, on the reincorporating as a new entity, verify property coverage for multi-year disaffiliation agreements. So some conferences are allowing for like a 2 or a 3 year disaffiliation process. You're going to want to maintain that they have property coverage under that because of trust clause issues. Some other scenarios, churches closing for other reasons like abandonment, financial merger. Conference might still have the building, and you're going to need to add that building to your current policy, and you're going to have to inform the carrier of the vacancy status to apply for a vacancy permit, or you can obtain a vacant building property quote. UMIP, we've actually developed a program that's very easy for conferences to go and get vacant building coverage. Very simple. We can turn around quotes in 24 to 48 hours on that. And the same considerations exist on the liability side on the tail or runoff as we previously discussed. The next slide, we're going to just talk about disaffiliation and UMIP. There's no effect on current UMIP coverage until an entity dissolves or cancels. Disaffiliated churches can participate or seek coverage from us, and new entities will likely no longer have ties to the United Methodist Church. And then on the vacant building program, just to give you some information on that, that's a QR code that you could actually go and fill in the information to get a quote. It's available everywhere except for West Virginia, Louisiana, and Alaska. Quick turnaround time, direct build policies, and best A++ rated carrier. And there's a link as well that you could click. And kind of as a final reminder, before we get to questions, UMIP is here to help with any insurance related issues, whether or not you're a customer or not. We are no cost service to insureds. And so going to open it up for questions, either in the chat box, or you could probably turn on your microphone and ask away.
So me being 2 months in and trying to get up to speed on the disaffiliation process, we have a bunch of churches in the mix now. Are we saying, and this is just a general question on insurance coverage for those churches, should something be in the disaffiliation agreement relating to the insurance that they need to continue to like the 3-year tail insurance? Because I don't, and I could be wrong, maybe it's somewhere that I'm not up to speed on yet, but I don't recall that type of language in any of the agreements.
That's our recommendation. Every conference is handling it differently though, right? So
Okay.
we're not saying this is exactly how you should do it, but to have proper coverage standards, to do tail policies if they're reincorporating as new entities, and you can even require them to show coverage to you for a period of, let's say they're not reincorporating as a new entity and they're keeping their same legal status but changing their name. You might want to just throw in a requirement that says for the next 3 years, you're going to send us copies of your policies so that we have them on file.
Okay.
They're not going to like that, but you know, it's a completely reasonable request.
Okay.
And I think the tail coverage is particularly important, you know, as you look at what states are doing with misconduct, and it's almost an open-ended period to file a claim. When you look at the Boy Scout situation, UMI's predecessor as a captive ceased operations more than 12 years ago, but had a claim filed against it recently related to the Boy Scouts. So that is an area I think of particular interest. And as far into the future as you can extend that coverage, I would definitely make sure that that's part of the standard agreement.
Okay.
Jeff, one question there that we're running into on multiple fronts, but it just presents itself in this scenario. I mean, can these new entities even obtain any coverage until after the disaffiliation is finalized?
Well, you know, I think if they're a legal entity and have an insurable interest, they can do that. I mean, you know, technically you own the building right now, but they buy the insurance for the building. So Matt, I can't think of a situation where a legal entity would be unable to purchase coverage, because if they're a legal entity, whether it's the current entity or a new entity, they have an insurable interest.
Well,
They might not be able to.
Can I explain what I'm saying real quickly? Sorry, is that with the disaffiliation, especially, that they are not becoming a new entity until the disaffiliation is approved at annual conference, and all of our agreements have to be in place prior to that. And so we're running into it on a couple of different fronts, but it's just one where certainly we're using the language of indemnification that's been recognized or recommended by the denomination. But these things were on my mind, but we didn't put it in there because we don't know how to hold them to it. That once they're an entity no longer associated with the denomination, right? There's really nothing to compel them to continue this coverage or to share it with us even.
Right.
They can definitely get a quote, even if they aren't technically a new entity until that. So they could send you the quote. And as their policies cease to exist, they can certainly send confirmation of and to make that a requirement of leaving. But we're not recommending you add things in there if they're it's a touchy, difficult process. We understand.
Well, and please know, I don't share it as trying to be argumentative at all. I just, if anybody has any ideas, because we're running into, again, it's not only insurance, but probably the primary one are banks not issuing loans until they're truly a new entity. It's just obviously with our process having kind of a delay between when we have to get all of our guarantees in place to when they become a legal entity, it is a problem.
Yeah, the insurance company is also never going to require, hey, show me your articles of new incorporation. If you tell an insurance agent, hey, here's our legal name, here is our address, right? They can issue a policy. The insurance company is not going to verify it like a loan, which we understand that is a different scenario. Sorry, Jeff, I cut you off.
No. You made the point I was going to make, and having one foot on the boat and one foot on the dock, dealing with the bank is a different situation when you're dealing with an insurance company.
Okay.
I could see where a bank would be nervous about that.
Oh yeah, when we own the property and aren't signing it over until this process is over, absolutely.
Yeah. And on the tail policies or the when an entity winds down, they're technically called runoff policies. They won't be able to execute those until coverage ceases with their current insurance company, but they will be able to obtain quotes for them, right? And they will be able to document that here's the price for it. Some of those quotes, there's a mandatory part, any claims made policy, it's written directly into the policy form, which is essentially a contract that they've signed, right? So it's already in there of here's what the price is if you buy a 3-year tail policy. It's for, if we're talking like directors and officers though, some entities might say, gosh, I want more than 3 years. They can go to the agent and say, is there a way we can get a 6-year runoff policy? Some of those companies are going to say no, but some might say yes, and here's the price.
Thank you. Yeah, any insights are extremely helpful there. Appreciate it.
Thanks very much. I just wanted to say I'm Claire Chapman. I'm in the New England Conference, and like Jim, I just started in January after the sudden passing of John Cardillo. So I'm on a steep learning curve as well, but I had concerns about the question that was raised about requiring coverage after disaffiliation when we have no control. So that was my presenting concern, and just thanks for this overview. It's enormously helpful.
You're welcome. We're happy to do it.
So sorry to hear about John. We worked with John for like 10 years when he was at New Jersey. So his passing sudden,
just
sad.
Great guy.
Yeah, just fun to be around. And, we'll miss it. We miss him. Yeah.
Yep, we do too. Yeah.
Thanks for that, Claire. And if there's nothing else, we can let you all get back to your day. And as a reminder, 2 things. This has been recorded, so if you want to refer back to it, please feel free to do so. We'll let you know when it's posted. And second, just to reiterate what Matt said earlier, we are here to answer questions, whether you're our client or not. We're a resource that's provided by the General Counsel on Finance and Administration, and happy to do whatever we can to help you. So keep that in mind as you come across questions. And Claire, will you be at the new treasurers meeting as well?
I didn't know there was one. When is that?
I'll
think
send
it's-
the info. It's the 28th to the 30th of March, Claire. I was just noting that because I didn't know that they had found.
Yeah.
I didn't know who they had found, but
Yeah.
so wonderful. Glad you're there. And I
Thank
will
you very
send you the
much.
information about the training.
Okay, terrific, terrific.
Great.
Thanks so much.
Mhm.
Just a quick question. Is the PowerPoint available also? Because I'd like to share some of those slides with folks at the conference.
We'll get that out to you.
That'd be fantastic. Thanks.
Great. Thanks for coming, everyone. Matt, thanks for your time. Appreciate your insight as always. And everyone have a good day and a great weekend, and look forward to chatting with you all again soon.
Thanks very much.
Thanks, everyone.
for the
Have a
info.
great day.
Take care.
Appreciate it.